What makes our firm different is that we provide true holistic planning. We integrate tax planning, income planning, retirement planning, and estate planning into one coordinated strategy because every financial decision impacts the others. Tax planning is foundational. It focuses on strategies that seek to manage lifetime tax liability by managing how income is taxed today and in the future. This includes coordinating withdrawals, conversions, deductions, and timing strategies so clients work towards tax efficiency rather than reacting to taxes after the fact. Income planning focuses on how and when money is withdrawn, with the goal of creating income that is reliable, sustainable, and tax efficient throughout retirement. Retirement planning looks beyond account balances and rates of return. It can ensure assets are positioned to support long-term lifestyle needs, healthcare considerations, inflation risk, and changing market conditions. Estate planning is intended to help assets transfer efficiently. Beneficiary designations are aligned with overall goals, and heirs are not left with unnecessary tax burdens or administrative complications. When these areas are not coordinated, retirees may often face higher taxes, reduced flexibility, and avoidable surprises. When they are aligned, planning creates control, clarity, and confidence. For many retirees, having a large IRA feels like security, and in many ways it is. But for clients with very large IRAs, one of the most overlooked risks is not market performance, it's tax planning risk. Traditional IRAs are funded with pre-tax dollars, which means every dollar withdrawn is taxable as ordinary income. As retirement progresses, required distributions increase. That may push retirees into higher tax brackets, raise Medicare premiums, and may significantly reduce the amount of income they keep. What appears to be a strong retirement balance on paper can deliver far less usable income once taxes are applied. Roth conversions are often discussed as a solution. However, for large IRAs, conversions must be handled carefully and as early as possible. Without coordination, they may trigger substantial taxes and create unintended consequences that ripple through the rest of a client's financial life. This is where a narrow focus on investments or even retirement planning alone falls short. For clients with large retirement assets, the greatest risk is not just volatility, it is unintended outcomes caused by incomplete planning. Thoughtful, integrated planning is designed to manage income, manage taxes over time, support long-term security, and preserve a meaningful legacy. That's the value of holistic planning. Retirees that create a plan are more successful in retirement.